My side, SJ Fibonacci here. Boy, you guys will not believe what has happened. I'm just gonna be I'm being transparent about everything, including trying to figure out this YouTube stuff or getting in the groove of this whole YouTube stuff. I just recorded the entire daily roundup for day number 4 on mute. I'm just gonna record this all over again. That's I'm gonna record it all over again. Been a long day. Actually had to go to the office today to work. So actually, commuted, had a long day, and just got back in. First time look at the chart since entering the trade last night. If you guys would have been following updates, you'd have seen that I had gotten 180 pips off goal last night. Didn't look at the charts for the rest of the day, as I mentioned. I tend to not look at the charts or try to trade when I'm actually busy or when I'm preoccupied by meetings and commuting to work. So I try not to look at the market during those times. So I have to be very focused, paying attention to looking for my entry triggers and stuff like that, right? So yeah. I don't know, I said so much stuff in the last video, guys. At this point I'm just really exhausted. So I'll keep it quick. If we look at our history, as I mentioned, I break out the trade in 2 positions. And I actually increased my something this time around. I increased the size of my positions. I entered 0.12 lots. I'll explain what a lot is at some point. I got $107 off the first position, which is halfway, which is around 100 pips, 90 pips to be exact. And then the second position, 176, there about $200 odd. And you guys can see I'm up $666 on the account, which means I'm 6-7% to my target of $1,000 to pass the challenge and get funded and become a live funded trader where I can actually make real money. Right? Again, remember, all this is simulated and it's just a test, pretty much prove that I can trade. So let's look at GJ. I was looking to sell GJ, so it actually break down the way I expected it to break down, but I didn't. Once I enter, I tried to trade one period at a time. So even though I trade both of them, I never ever have exposure to both at the same time. Right? I never ever have exposure to both at the same time. So I never entered this trade. But just to give us the insight in terms of how I look at the market, if you can see, when the market came down here from yesterday from the news, it took out this low. Once the market, it took out this low, right? So it breaks structure. So an uptrend, I thought the uptrend is, again, this is me just giving some insights. I'll eventually be more detail about this. An uptrend happens in the market where the market is creating higher lows. So each time it creates each time it creates a low, it's higher than the previous low. So higher lows and higher highs. And it's predominantly higher lows, to be honest. At least that's how I think about it. So people like to define it as higher lows and higher highs, but it's predominantly higher lows, right? The market continues to create a new low. It means that it's climbing, even if it's not creating higher highs. The higher lows that I used to characterize it, right? So, and a downtrend is where the market is creating lower lows and lower highs. So each time it goes and creates a new low, so it goes in waves, right? It goes in waves, as you can see. It goes up, back, up, right? Same thing for the downtrend. The downtrend goes down, pulls back up somewhat, and it goes lower. So each time it goes lower and lower. Now, when we start break of structure, right? So before you can tell when the market is going to reverse. It has to break structure for reverses, right? It has to break structure. So remember, I told you the structure of an uptrend is higher highs, higher lows. So higher lows, higher highs. The moment the market takes out, for example, this market was in an uptrend here. You see the moment the market took out this low right here, it broke structure. Because remember, uptrends are higher lows. So the moment it actually creates a lower low, so if you look at this, it actually created a lower low. Okay, it broke this low. What you then do at that point is to wait for the market to retrace. So never when it creates the new low here, never you try to get in at this point or to sell. Alright, you watch the market can do it. You watch it retraces, because the market naturally moves in waves. Alright, it retraces. And then that's how the retracement tool comes in. So this is the Fibonacci retracement tool. Somebody somewhere found out that usually when the market makes these drops or even pushes to the top, so the market dropped from here all the way down here. Before it continues to go down, it now retraces around 61.8%. It's what we call it's actually a golden rule, which repeats itself which repeats itself in multiple areas of nature. You guys know Fibonacci numbers. Each Fibonacci number is the previous number is 6.8% of the following number in the Fibonacci sequence. And so this is the golden rule. I think there are some other things that apply to as well within the human body. I don't remember off the top of my head, but the 61.8 is the golden ratio. And yeah, so usually wait until usually what I do is wait until the price retraces between 61 and 78, and then look for signs of the continuation to fall. I say I was waiting for it yesterday. I didn't end up entering because I already have entered gold. And that was the same reason for entering gold. Let me see if that was the logic. Right, that was the same logic for entering gold. Alright, that was the same logic. So the market, was that the same logic? What am I saying? Yeah, it's the same logic, but it's on a higher time frame. So let me show you. So it's the same logic here. The market fell all the way from up here, but this time the market was already in a downtrend. So it fell all the way from, well, not even a down, yeah, it fell all the way from up here, came down here, retraced back. If you look where it got between 61 and 78, and then worse, it coincided with my trend line. So it takes 3 touches to validate a trend line. 1 touch pull up, 2 touch, the 3rd touch. So I was looking for signs to enter. And once I got this closure right here, I'll take off this for now. Once this candle right here did dip below this one, once it took out the low from this candle and closed here, I entered. And you see, it just broke all the way down. But yeah, essentially, again, I'll give more insights. Again, my strategies are very, very simple. I use horizontal lines to mark off weekly levels, highs and lows. I use the ray to mark off daily highs and lows, key daily highs and lows. So you see, I have all of them there. Yeah, that's pretty much it. I use those to determine how I approach the market. I haven't actually done the analysis to see where I think this is going to go, or even, yeah, so I can think about it and look at the market and see where I think this is going to go. It might very well, again, the market very much operates. It might still be respecting this trend line, and it could just, I might end up buying. From the last touch down to here, I might end up buying all the way back up to this Fibonacci. I might end up buying all the way back up to the trend line. I might do that. But of course, I'll let you guys know if I do enter. Yeah, this is not bad. I might end up 100 odd pips. 100 odd pips. I have to sort out my Risk to reward. Risk to what is always 1 to 3, so I'm not risking more than that. And then there's also something I want to show you guys. So you see, so the third thing about this now. Remember the market would have created this low. Market created this low right here. It retraced. What actually, if the trend was supposed to continue, so it retraced, right? If the trend is supposed to continue, it really was supposed to come all the way down here and take out this low. What did it do? It actually created a higher low here. So this is actually an indication that whatever downtrend was happening here has actually been broken. Structure has actually been broken here. So I might look to buy from here. Whereas I see in these candlesticks here where the market is pushing down, you know, there's liquidity pushing it back up here. Yeah, just might enter this. But of course, I guess by the time it's posted, I'll let you know if I did in fact enter. I don't want to get greedy. Been a good week. Up target is 10%. I'm up 6.7% in 4 days of trading. Yeah, I can't ask for anything else, anything better. But let's see how let's see what happens here. So until next time, I don't know if I'll actually trade tomorrow. I tend not to trade on a Friday. Friday market usually very slow. End of the week, a lot of activities. I might do a weekly roundup of everything that did, and I might put some time into actually creating some educational content for those who want to learn and want to start. What I can say is that the Forex journey is a whole lot easier when you have support and people who are also trying and stuff. But let's see. Yeah, I'm going to enter this right here. I am going to enter this trade. Of course, when I raise more $100, I'm going to enter this trade. So what I usually do, though, I have a position size calculator to make sure that I'm sizing. Make sure that I'm properly sizing my trades, right? So I'm trading gold. I want to risk $100. My stop loss is 35 pips. So that's 0.4 each. 0.4. Yeah, I'm going to enter it right here. You guys can see. And then I don't know if it's going to work out. This might just be doing too much. Hold on. But let's just see. I'm going to enter 0.24, and this is a buy. 1, 2. Alright, just to give you an idea how I go about entering the trades and stuff. Now I go back to the position, and I 2304. Two three 0308 on 35 pips. I'm just gonna enter, and that's gonna enter my stop loss. The first thing I do, enter my stop loss. Stop 35. What is he saying? I bought, right? It's a buy. Alright, I'm just gonna figure this out. I'm not sure what's happening here, but let me end here and I'll figure out what's happening. So So until next time, guys. If I do, yes, I'll also give the trader highlight for this specific trade as well.